What is up, XRP community? Welcome back to another video. Thank you for joining me. I want to talk about a Ripple blog post titled A New Era for the XRP Ledger, Implications of the Election coming this November in the crypto market, some macro data that came out today, specifically the consumer price index numbers. Towards the end, the Ripple chief legal officer went on an interview talking about an SEC appeal and what would happen, and some interesting info that you probably do not know, I did not know this, about Ripple's creation. Really quick, if you guys are active on Twitter, check out my Twitter community in the video description below. Post any relevant information and I'll feature you in future videos. And if you need a spot to get XRP or Flare, I recommend Uphold. It's sleek, it's simple, it's secure, for a dollar cost average, and get my XRP daily. So let's hop right into it. Talking about general conditions in the market, a lot of people are saying for a retest now of 30K on Bitcoin leading into the election, which would make a favorable price for XRP. I could imagine if Bitcoin does go down to 32K, you'll see XRP in the 30 to 40 cent range again. But ultimately, if you zoom out on the Bitcoin chart, this 30 to 32K range is not too far out of the picture. And talking about the macroeconomic data, Bitcoin dropped 5% today as the US had a rejection of the consumer price index. The July CPI inflation rate falls to 2.9%, below expectations of 3%. Core CPI inflation fell to 3.2%, in line with expectations. This marks the first month with CPI inflation below 3% since March 2021. And there's still estimates that the first rate cut is targeted this coming month in September. And when the rates cut, we will see an increase in inflation. Now, one thing to keep in mind, take this with a grain of salt. This is a fact. The consumer price index, if you don't know what that is, it's a basket of goods. So like consumer products, oil, energy, natural resources. And each one of these baskets of goods has a weight. And they add up all those numbers. And based off the weight of those numbers, they come out with this data. They redefined, I talked about this in my last video, they redefined what a recession was during COVID-19. They also redefined the weights on the consumer price index, specifically towards gasoline. And you know, gasoline has been very volatile during these past 4 years. So these numbers, to me, they're like employment numbers. They're BS. If the numbers don't fit their agenda, they'll just change how they structure the numbers. I got 13 new subscribers on my last video, so thank you to everyone watching the content, enjoying the videos. Thank you to everyone returning to the videos. I hope I'm not wasting your time. Best way to support the channel is hitting that like button. It's free and gives me positive feedback to let me know that you do enjoy the content. David Schwartz, Ripple CTO, came out and said if you were thinking that maybe Harris wanted to change the policy on crypto, but didn't want to be seen as copying a policy position from Trump. Obviously, a lot of people are thinking Trump is pretty bullish on crypto. He's speaking at the Bitcoin conference this year. Harris is more part of the system. And in my opinion, I think we could see some more Gary Gensler type legislation. However, this article came out and shows that Harris is actually copying Trump's proposal on ending taxes on tips. So maybe we could see her copy another one of policies of Trump and be a little bit more favorable towards crypto. So interesting history lesson about Ripple. This guy is from Smoked OG. He says, time for a history lesson. This is a perspective on Ripple's background that is commonly not discussed. Ripple emerged in 2004 as a mutual credit network. Did you guys know this? If you did, pat yourself on the back. Maybe start a YouTube channel because you know more than me. Comment below. I had no idea about this. Before Bitcoin, 2004, early days. Between 2012 and 2013, Ripple evolved into a distributed ledger technology company with the XRP ledger, which combined the credit network business model with the crypto asset. Until 2013, every crypto, and this is really important, really innovative, every crypto in the early days except XRP was based on the Bitcoin open source system. Doge, Litecoin, can't even think of cryptos that were around in 2013, most are done. 2015 was when the company pivoted to cross-border payments. Shortly after that, because of the FinCEN court case, this court case right here, when Financial Crimes Enforcement Network went after Ripple and made them pay a $700,000 fine, Ripple pivoted to target customers to financial institutions and banks. This allowed Ripple to rely on the regulatory compliance of banks instead of on their own. The concept of Ripple and XRP is older than Bitcoin and not meant for retail. And he cites a few articles here. Until July 2013, all crypto software, with the exception of Ripple, was based on open source Bitcoin systems. Let's just show you Ripple's different. Ripple formalization of remittances and correspondent banking. Older than Bitcoin itself, Ripple emerged in 2004 as a mutual credit network like Hawala, a time bank, or a local exchange trading system. The primary use case for Ripple was to provide an infrastructure for scaling up LETSs, local exchange trading systems, and other alternative currencies. Between 2012 and 2013, Ripple morphed into a DLT company, the XRP Ledger, that combines the mutual credit network with XRP in a distributed currency exchange. And this is all in 2012. Over the past 10, 12 years, Ripple has added on so many more features to this, whether it's the private CBDC ledger, whether it's the automated market maker, whether it's the Ripple stablecoin, which I think could even be bigger than the cross-border payments. Ripple is also the name of the company that offers payment solutions built on top of the XRP ledger. While Ripple still owns a significant amount of XRP, the XRP ledger remains an open distributed ledger. Since 2015, the company Ripple focused primarily on interbank payments, aiming to become a competitor to SWIFT. And this is in 2012. Currently counts 200 customers in 40 countries. And then wrapping it up right here. Ripple influenced the disposition of the ledger when the company pivoted towards cross-border payments. Shortly after, Ripple applied and obtained a New York State BitLicense for institutional sales of XRP. This is pretty crazy because not only is this in the early days of crypto, but New York is widely known in the US as the most, if you're doing something with the law and crypto, you don't want to be in New York. Ripple then pivoted towards financial institutions to partially outsource regulatory compliance, serving banks rather than individuals, meant for Ripple to be able to rely on banks' compliance departments rather than its own forces. Now, with Bitcoin dropping today in the CPI data, a lot of people were speculating about Bitcoin being sold by the U.S. government because the U.S. government sent 10,000 Bitcoins to Coinbase. It turns out they're just custodying their Bitcoins on Coinbase, which is weird. Why would you ever use a centralized exchange? If Coinbase goes down, your funds on Coinbase are not yours. Same with Uphold, same with any exchange. It's in the terms of service. When you have your crypto in the exchange, they hold the keys, they hold your crypto. So why is the U.S. Marshals putting 500 million in Bitcoin on Coinbase? There's probably more to this story, but they did not sell. They just put it into Coinbase custody. A lot has been happening about this Ripple stablecoin. They're testing it right now. Ripple created 9 quadrillion of the Ripple stablecoin during testing just to probably brute force it and see how much the system can handle. And that's coming at the same time when we have articles like this. Why asset managers, brokers need a shared stablecoin. In April, USDC stablecoin issuer Circle announced it was a secondary market buyer of BlackRock's tokenized money market fund. So investors can sell their tokens 24/7 in exchange for USDC. This was a groundbreaking move for a fund issued by a traditional finance asset manager. Think about the craziness of this. Everything is internet-based. We're living in 2024. 100 years ago, they probably thought we'd have flying cars by now. However, you still can't trade your assets in the traditional market after 4:30 or 5 p.m. You can't trade on the weekends. You can't trade on holidays. Doesn't make any sense. You should be able to trade your assets 24/7 instantly whenever you want. That's where stablecoins come in. While most institutional investors in tokenized money market funds are crypto firms, this ability for an institutional investor to off-ramp money from money market funds at a precise time is extremely powerful. Other asset managers, though, are at a disadvantage. If they don't want to support 24/7 instant off-ramps, which why wouldn't they? They'd have to hold large amounts of idle stablecoins on which they earn zero interest. The most obvious one is Franklin Templeton, a pioneering asset manager that launched its FOBXX tokenized money market fund 2 years before BlackRock. Until recently, investors selling units could only receive withdrawals via bank transfers. Less than 2 months after the Circle announcement, Franklin Templeton said that institutional investors could off-ramp using USDC stablecoin. He highlighted that the asset manager avoided using the 24/7 off-ramp, instead saying shareholders of the fund may initiate conversions at any time. So stablecoins are going to be one of the best value propositions for crypto to merge with traditional finance. And I think this Ripple USD stablecoin is going to be absolutely massive. Really quick, if you guys want $41 for free, sign up with Webull. Deposit 1 penny. You can get up to $3,000 in free stocks. But typically, you'll just get $40 to $300. But it's a great offer just for depositing and signing up. Deposit a penny, $41 in free stocks. Sell your stocks, close your account, do whatever you want. Get some more XRP if you feel like it. A link in the video description below to Webull. And now for this interview with Stuart Alderoty and the Crypto Law Channel, talking about the outcomes of a lawsuit when the SEC, if they choose to, appeals. And if you guys made it this far in the video, thank you for giving me 11 minutes of your day. I don't take that for granted. I really do appreciate it. Let me know you're a loyal viewer and you watched this far by commenting appeal in the comment section below. Enjoy the clip.
Look, if the SEC were a rational actor, they should just move on from this case. Again, the court's finding that there are no victims here, that no one suffered any loss in this case. There are no allegations of fraud. Nothing in this case advances the core mission of the SEC. But we all know that when it comes to crypto, the SEC has proven itself not to be rational. In fact, the court, in our case, criticized the SEC for engaging in litigation gamesmanship and tactics rather than faithfully applying the law. So I wouldn't be surprised if the SEC does appeal. But I'll say a couple of things. Number one, and I think this is important for folks to appreciate and understand, XRP's status as not a security and the secondary market trading of XRP as not security transactions, that is the law of the land, and that does not change even if the SEC appeals. And I would ask everyone to focus on that. I would also ask people to focus on if they appeal, and again, I hope they don't, and if they're a rational actor, they shouldn't, but they're not rational. Statistically, the Court of Appeals, specifically the U.S. Court of Appeals for the Second Circuit, where this case will go, reverses lower courts less than 10% of the time. And given Judge Torres's careful and thoughtful treatment of all of the issues in this case, we're very confident that any appeal would withstand a challenge by the SEC. So again, if I were advising the SEC, not as Ripple's chief legal officer, but as a lawyer who's been doing this for a long time, I would recommend that they do not appeal. This case was an overreach from the outset. They've got a terrible record. I would say, look, SEC, go back to your core mission of protecting investors in the market and stop focusing on cases where there were no harm to investors and there was no harm to the market other than the harm that you visited by actually filing the suit. And if I were the SEC, on a good day, I would avoid the Supreme Court. With this Supreme Court, I don't think that they stand a reasonable chance of prevailing on any of their theories. Whether or not a token in and of itself can be a security, no, it cannot be. A token doesn't embody, an ecosystem. All of those theories that they've been trying to expand the securities law that were soundly rejected in our case, they're going to continue to be rejected by